You know, the other big story of the last couple of weeks is momentum. I don't need to tell you how much we've been focusing on it because I feel like it's been the key driver of this market. The Momentum ETF is set for its first back-to-back negative weeks since December. You could go down the list of the AppLovins and Palantirs, and we talked about MicroStrategy, but Constellation and Vistra and Robinhood and ANET, some respects CrowdStrike. GE Vernova had a pretty big upset as well. And you've trimmed that, which is interesting to me. Why'd you do that?
Well, just simply because I'm up 160% since it spun out last year, and it's fairly rich. And I kind of think that there's other opportunities in the same theme, data center, grid, power, all of that, in other names like Quanta Services and like Eaton.
So you bought more of those too, by the way, right?
I did, and I have been, Scott. I have been for a couple of weeks.
Just to reiterate, so you trimmed GE Vernova,
right?
A pretty good chunk of it, and you took the proceeds and you bought more of Eaton and bought more of Quanta. So
then the good news is that they both just reported earnings and they both blew it away. And the Quanta Services EBITDA up 40%, backlog up 14%, electrical up 38%. Eaton data center up 45%, orders up 75%, pipeline up 65%. And their backlog is threefold normalized levels. And these stocks also have pulled back along with the other momentum names. But I just think the valuations, along with the growth, along with the beating expectations and raising expectations, that's what I care about. So I've made these much bigger. And GE Vernova, guess what? If it pulls back, I would buy it again. I would buy it back. But it's up so much. I think it's prudent to take gains.
Dell Technologies is getting slammed today. It's down 15% on the week. If you just look at some of these other names, yeah. Robinhood is down 19%. That is from the 18th of February when really the momentum sell-off started to pick up some steam. You have that.
We bought more this week, Scott. I mean, we love this name. I think I talk more about Robinhood and the network than Vlad does. We had a great conversation on Friday on the closing bell about the covered call that we wrote. It was a one-year leap. We sold it for $13 on last week, on Friday. We bought it back this week for $6, so we netted a $7 profit selling a call on Robinhood. We added to the position this week, and we actually wrote a call yesterday again, bringing in another $1 for a March expiration. So a lot of volatility on this name. We believe in the thesis long term, but we're printing money writing calls against Robinhood.
CrowdStrike's down 16% since the 18th of February. Price target today goes to 450 from 418 at JPM. You trim this name?
I did. Well, we talked about this a couple weeks ago, so I was trimming it when it was not down as much, but I was up 95% from the August lows. Great company, fabulous growth, believe in cybersecurity.
Great turnaround.
Really good turnaround. I mean, up 95% since the issues that they had, the outages. That's when I bought it. But it's had a really good run back, and I thought it was vulnerable for a pullback. I put the money into Palo Alto a couple of weeks ago, and then last week, I've been adding to Palo Alto, just building the position. It's a volatile stock too, but it has lagged, right? It's only up 22% in the past year. It's actually flat the last 3 months of this year and last year, and that's relative to the group that was up 40 to 50% last year. And so I think this is a company that has a great platform strategy, great products, great solution set, the most comprehensive solution set. Nobody has it all, but they have a very, very good platform story and strategy. And I think the free cash flow is growing as well, and it's going to be about 4.5 billion by the end of this year. It gives them a lot of flexibility to continue to invest in the business and to grow. And I think eventually, as they execute, the stock will rebound.
So they're going to, speaking of executing, they're going to report their earnings next week. So you're going to get a real-time look at exactly how they continue to execute and rebound from the issue of many months ago that they had. So let's talk software for a moment, because the IGV is having its worst, that's the software ETF, is having its worst month since April, right? We're on the last trading day, obviously, of the month. You bought more Salesforce at $295. Why so?
It's a relatively new position for us, Scott. We own it in both the dividend strategy and the growth strategy. We like the AI play here. I thought that the market sold off because they didn't like the guidance they were getting. It seems like they discount the guidance quite frequently with this position. The agent force is really what we like behind it. The margins are increasing. They're expanding. They're up to 34%. They have 3,000 paying users for Agentforce. They just rolled this out. And if you are a customer of Salesforce, you love it, and you're embedded in the technology and the infrastructure, it's hard to leave. A very profitable business. I think it's a buy down here.
So you bought it $295. Citi likes it at $350. They're neutral on it. They reiterated that. Actually, they cut it to $335. I'm sorry. They cut the price target from $350 to $335. Truist has reiterated the buy rating that they had. We didn't talk to you on Snowflake because you were traveling, but
yes.
What's your take now on that quarter as we stay in software for a minute?
What a difference a year makes. And the CEO is now in his role for 4 quarters. And he's got a sea legs, more than his sea legs. He's growing better than expected. Total revenues grew 27%. Product revenue growth, 28%. The real piece here is the guidance, because I was thinking they were going to guide for the full year, like product revenue growth about 2021. They guided for 24. They also guided for 8% margins. I think that's going to be the story going forward, the margin expansion story, as they gain momentum, market share, and have pricing power. So this company it's been certainly a volatile one over the last couple of quarters, but I do think they are positioned quite well in 2025. And oh, by the way, they announced a deal with Microsoft, a partnership with Microsoft on another AI initiative that should be viewed positively.
Okay, so software not that great at all. NVIDIA obviously putting the focus on the chips, which haven't been good this week. It's the worst week for the SMH since last September. It's down almost 9% week to date, taking advantage of part of the slippage there. Also, as it relates to the momentum, is Broadcom, which you bought more of.
It's been painful, too, just like NVIDIA, right? They kind of trade together.
For leaning in.
Well, it's down 20% from its highs. I'm not crazy about the valuation, so I only bought a little bit, and I will continue to buy if it continues to fall. But I just like the diversification in terms of the revenue mix. It's not just data center and AI and cloud. It's also software. 41% of their business is software. VMware is humming at this company, and they have legacy businesses that haven't recovered yet that I think is going to be the 2025 story. So I like this management team a lot. I think they're going to do more M&A as well. And I just thought down 20%, I have to start adding at some place, and that seemed like a good place.